Just stay with us here because Charles Peabody of Portales Partners, he's a top-ranked analyst on BlackRock. He joins us now on the phone to look at the fund management results. And as Sheila was mentioning, the analyst call is going on still right now. It hasn't wrapped up yet. And Charles, just listening in on the call, as Sheila was saying, you know, these results didn't really knock anybody's socks off. What do you make so far of what you've heard?
Well, as Sheila reported, both the revenues and the bottom line were disappointing. You know, BlackRock is facing a transition this year on two fronts. One, they're trying to integrate BGI, the BARCLAYS global acquisition that was completed in the fourth quarter. And they're trying to, you know, reshift their product mix from fixed income to equities. And I think that was this quarter is the first quarter that we had BGI in there for all 3 months. So many of us were trying to get a gauge of margins and the impact. And I would say that the margins were disappointing in this quarter on some of their assets under management products.
Yeah. Well, where do you want to see margins, Charles?
Well, you obviously want to get them back to the old the old BlackRock levels. But it's also, I mean, if you look at the flows as well, yes, there was $40 billion of outflows in the money market, and there were outflows in equities. But those were pretty much in line with the ICI industry data. Where it was disappointing was on fixed income. There were significant outflows there that were greater than what you would have expected from the industry data.
Okay, well then, given that, then Charles, I mean, what do you say then that how BlackRock can reverse those outflows?
Well, I do think you're going to have a remix or a redistribution from fixed into equities this year, and you know we're emphasizing names like Morgan Stanley that has a strong equity platform is going to capture that mix change. What BlackRock has to do is really sell the new platform, BGI, which gives them much more of an equity capability. They're much more active in the passive funds than they are in the active funds, and they're sort of in a startup there in the active funds. And that's what they have to do a better job of selling.
Sheila, you want to jump in?
Dharmarajan from the newsroom here. You know, there's been a lot of focus on BlackRock's ETF business, particularly with the BGI acquisition. And if you look at the last 3 months, they've actually been losing market share. Do you think that trend is going to continue as that market gets more and more competitive?
Well, I think that's one of their strengths has been the ETFs. And one of the things they just mentioned on the call, and we need to dig into this, is that they're starting to see better retail flows. Up until now, the individual investor really has been absent from the equity side of the market, much more active in the fixed income side. That's a good sign if the individual investor is coming back to equities.
Okay. All right, Charles, we're going to have to leave you there. But thanks so much, Charles Peabody, analyst, one of the top-ranked analysts on BlackRock from Portales Partners.